Hey, what's up, traders? Thursday, January 19th, 7:49 a.m. And here are your morning ideas. What's up, traders? It's an odd day yesterday. I would say if you look here, yesterday we were expecting more of a chop, or I should say I was expecting more of a chop and a run towards 40.80. I warned that, this 39.60 area was the magnet below, and we could potentially pull back to it because it's like a gravitational pull, and we're above it. It's a heavily traded price. We have these heavily traded prices behind us, and the market would pull to them if we can't gain footing to push towards 40.80. And what we've done, we fell back into the middle. I didn't expect this to be as trendy as it was yesterday. You can see here, this was yesterday's trade, and here was the PPI number. The market kind of moved around, gradually higher in the morning, and then right at about 10:30, we get this big bar down on the 15-minute, and then we just kind of fall from, a high of yesterday at 40.30 all the way to the close at 39, almost 90 points lower. A move that I didn't really see coming yesterday, to be honest with you, even though that I knew that 39.60 could be the magnet, could be a magnet below if we started to head lower. However, usually in these areas you see more, choppy behavior, and that was more trendy. Now, with that said, we've got the continuation overnight, and we could take all of that back. Remember how we talked about the normal way that the market behaves in these areas is more of, hey, it can go down 100 points, back up 75, down 120, up 150, and we don't go anywhere, and we continue to build a lot of volume around these heavily traded prices, which continue to, concentrate in the 39.65 area. Okay, so look where we are right now, basically right smack dab in the middle of the prices we've traded since May of 22, right? May. We're almost in February, right? So that's almost I keep saying 7, 8, 9 months. That's almost 10 months where we haven't really left this area at all. We've just kind of been trading back and forth. Trading 39.11 right now. I don't know if the market's in wait and see mode. I don't really know what we're waiting around to see, if the Fed's going to hike more, or we're just looking for the next catalyst to move us out of here. But eventually when we move, the way this happens is and if I look at the daily here, we trade back and forth, we build a lot of volume. And remember what happens, the mechanism of the market and how, let me get one of my tools here, that, all of these, the sell orders, you get the stops getting put up here above these ranges. When the range looks obvious, you get a lot of stops lined up in the same spot, right? And this happens actually a lot on the intraday levels, around yesterday's high, yesterday's low. But all of these little arrows here are I'm signifying stops, okay? And as we trade more and more here, there's more volume in here. It gives us more stops and more catalysts to move out of here when we finally start to break, okay? And I'm not one to trade breakouts, but these stops get triggered from the people that are in this area. And again, if you've sold this market, you have a buy stop. If you sell, you have to buy to get out. And those buy stops actually propel the market higher. Same thing goes on the other side, where all of the buyers have their stop orders in here, okay? And then as the market breaks lower, these stop orders start to get triggered, and those stop orders are sell orders, and it triggers the market to flush. We call these the flush out. Flushing out the weak hands, right? Flushing out the people that have their stop losses right on the edge of these heavily traded areas. And the more we trade in here and the more volume is in here, the more stop losses end up on the edges, and the more and this is the mechanism of flushing out, coming back and retesting. Again, we talked yesterday about the head and shoulders pattern. So you would get a flush and the market starts to go crazy, everyone starts chasing it. It comes back and tests, If it fails, it falls back in, and then you get your head and shoulders pattern. And again, people talk about patterns, but they don't really understand the mechanism of why the market's doing what it's doing. It's just, hitting a bunch of stop orders, coming back and retesting, trying again, and it can't go, falls back into the heavily traded prices, and then we go try the other side. We come down here, we flush everybody, we come here, we test, we push through, and then all of a sudden all those stop orders are triggered. We flush everybody out, we pull back, we try lower, we fail, and we come back in. Okay? And what do we get? We get a nice, evenly distributed profile with these edges are pretty thin because the market goes there really quickly, comes back in, and then we start trading again in the middle. And then you get these nice fat profiles, and the market does this. And then it goes to the next area and looks to do it again and again and again. So I don't see a whole lot here on the intraday levels. I mean, if we look at the 4 hour real quick, we're pulling back to, 38.77 would be this next area below right here. You see it? 38.77, it's the value high. 38.77, I would expect that to be the next kind of big level that we test below as we've moved into the upper area over here. Now we failed and we're pulling back to the lower area. So 39.77 or 38.77 is an area I'm looking for this morning. And then after that, you probably get a bounce from there just because this was heavily traded. And then from there, who the hell knows? Let's see if there's some news, coming out. I think that this is a quiet week of news. I can pull that up real quick and we can check. But I think there's a pretty quiet week of news. Nothing tomorrow. Yeah. So no more news this week. So I'm looking at 38.70. And again, on the upside, 40.80 is still something I look at. Obviously, probably not going to happen today. It's 170 points away. The volume is good, though. It's 150%. And if I look down here, the last thing I'll say is if I looked at the average daily range in this product for 24 hours is 73 points. So if we have 150% of the normal volume, we could probably go 100 points today, and that'd be quote unquote normal for the amount of volume that we have. Okay. So just keep that in mind. That's why I always like to keep the ATR down here, 20-day period, so that I know, okay, right now the average true range on this product is about 74 points a day for the Globex session, so that I know, okay, from the open last night, I can say that about 74 points up or down would be the average, okay, the average. So if we open, like let's say at 39.50, 75 points, okay, that would get us to 38.75, okay? Where's 38.75? Ding, 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 right here, okay? So if we go the normal amount of points down today, okay, then we'd run right into 38.75. That doesn't mean we have to do that, but you can understand how we start to put this picture together with all of these little tools we have. Not one tool is going to make you money, but the whole picture and understanding the context around how the market moves is where the gold is. All right. So that's it for today. Sorry it's so long-winded. I look forward to talking to you all soon.